the stuff that I know is not based on just what one person told me or what I read in a book or in a magazine. It's based on lots of experience. We've been in business since 1980. My father created the business and he retired in '06. He's happily retired, I can assure you of that. Why do I know that? Well, yes, he has much less stress, but for the amount of the check that I write him every month, I can assure you he is very happily retired. He actually had to work last night. He actually had to have one of these in Ohio, but he very rarely doesn't work too much. So he's happily retired. I've been doing it since '06. It's a lot of fun. They were talking about inspiring women. I don't know if I so much inspire women so much, but I think I help a lot of people, and that's actually, I enjoy doing that because there's a lot of you ladies, I don't care if you've been in this business for 5 days or for 15 or 20 years, you always need help, no matter what you're doing, whether you're selling cosmetics or you're selling investments or whatever. You always need a little bit of help, and that's what I'm here to help you with tonight. And because we've done this for so long, we've done 60, maybe 70,000 Mary Kay tax returns. No one has done as much as we have in this. So when you think of taxes, what governmental agency do you think of? The Blessed Internal Revenue Service. So, when you, as most men, spend time with their fathers, what do they have a tendency to do a lot of? Crying. When they're kids. The homes you grow up in, right? I'm not thinking crying, I'm thinking more like fun and fishing. Not crying. You went away from my point completely. Wow.
Just 2 boys.
They ain't crying. But I was thinking more of the hunting and the fishing thing. Well, what did I do when I was a kid before I could drive? Where did I go with my father? I went to the IRS. How exciting is that? So I was doing this a long time ago. And basically he took me with him to do what? Experience. So a lot of the stuff that I know is based on classes here, there, but it's based on actual IRS experience. And I got this experience because I've been dealing with it for so long. So that's what you want. You want someone who actually knows taxes, but specifically how the IRS wants your Mary Kay tax stuff. Does that make sense?
Yeah.
So that's how I know what it is that I know. A lot of time, a lot of returns, and a few hours with my father at the IRS. A lot of fun stuff there. So, the first thing I want to talk to you tonight about is some things that you need to keep track of. This is about the only time I want to talk to you about some stuff you need to keep track of. The first thing is, all this stuff has to do with taking stuff off your shelf. Other than sales, other than your sales items, what's the first thing you're going to take off the shelf? Absolutely, you're going to have personal use, right? If you don't have personal use, why in the business? What's the second thing that you're going to take off the shelf? Demos. Should you do demos? Of course you should. Third thing, gifts of Section 1. With gifts of Section 1, there is a limitation of $25 per person per year. $25 per person per year. Wholesale.
Per consultant per year or per guest party?
Heartbeat. It's a heartbeat, whoever that is. If it's to a individual, it's per person per year, $25. You say, why is it so low? I haven't any idea, but that's what it is. So, that's gifts of Section 1. What's the fourth item? Not Section 2. It goes back to it kind of goes with what you just asked. What about the people who have the parties for you? Yes, the hostess.
Okay.
There is no limitation to that one though. And what's the fifth item? What's the fifth? The fifth item is for that product that's collecting dust on your shelf, and the only thing it might be used for as a writing utensil on a chalkboard. That product is so old that you wouldn't even want to donate it. Who would you want to gift it to? Not to the trash. Never donate.
Yes.
Funeral homes. Give it to the funeral. Don't donate it either. Battered women ain't gonna want that. If they go, they want no stinky product. Funeral homes, do they care about if it's a little bit stinky?
No.
They care about the quality of that product? No, they don't. Now, I assume the windscreen, the sunscreens are probably pretty popular here, right? Not going very far a funeral home. But with a funeral home, you're still limited to $25 per person per year, okay? Because a funeral home is a business, it's a for-profit.
The dead person? I'm so sorry.
I mean, if you got a name, if they're gonna give me a name, why not?
I need their name and social.
Not your social. They don't give me that.
So the okay. No, it's a real question.
Per funeral home.
Okay, so come
Per funeral home. You say, well, you may have some stuff. You have maybe lots of stuff. Then you got more than one funeral home in the Colorado Springs area.
I did.
But what if the product is not that bad, but it's only collecting dust on your shelf? Then what are you going to do with it? And this is my point of the fifth item. You're going to donate it to a charitable organization. Donate it. Now, if it's donated, there is no dollar amount. No dollar amount if it's donated. Okay? No dollar amount. So if you donate it, you got to get something with their letterhead on it saying thank you for the product. And then you have to apply a dollar amount to it. Does that make sense?
Can we tell them the value?
What's going to happen? She asked, can you tell them the value? What they're probably going to do is they may get that value from you, or they may not. And if they don't, you'll just have to have a list of those items that are donated. Never let your product collect dust. Product collecting dust makes no money. So you get rid of it before then. And that's how you get rid of it. Does that make sense? Those are 5 items. What do you need to keep track here? The wholesale or retail? Wholesale. What you buy it for. How you buy it. How should you account for it? How do you need to track this stuff? Just simply write it down. That's my opinion. Just simply write it down. Software programs are nice, but it's very important that you know how to use those correctly. Because I've had a lot of issues with the software systems. As long as you're comfortable with using it, that's fine. I always use this example. I used it last night. I know of a director in the state of Virginia, known her for a long time. For 4 consecutive years, I asked her to confirm her sales. I thought her sales were overstated. Every year she says, Jody, they're fine. Jody, they're fine. Jody, they're fine. The 4th year she says, maybe I'll check on this. So the 4th year she checked on it. What'd she find out? Her sales were overstated. Why was her sales overstated? What was she doing? No. What she was doing, but good choice. Good point. What was she doing? She was accounting for her personal use as a what? Do you want to account for your personal use as a sale? No. No. Do you want to overstate your sales? Of course not. But she was concerned about making her ending inventory correct. And because of the software, she overstated her sales. So as long as you understand software and know how to use it, that's fine, because ultimately, who's responsible for those numbers?
You are.
That's correct. Any questions about those 5 items?
One quick question.
Yes.
So as far as getting rid of all your stuff, not collecting on the shelf, this is at the end of every year. So start before we do our taxes, before the end of December, we want to go to a funeral home and...
Do you need to do this in the next couple of weeks? I don't care when you do it. My point, though, is never let it just get old. That's my whole point.
Okay.
Whether you find this product in February or you find it in December, don't matter. Just as long as you don't, just as long as it doesn't go bad, and you don't throw it away. Don't throw it away. Throwing it away makes you no money. Where the other stuff will. At least it's an expense. We're throwing away. You got nothing. And the thing is, if the funeral home likes it, maybe they'll buy stuff from you, right? So there's your marketing suggestion. Got little customers? Hope not. Hope not. So that's the first, those 5 items. The next area we'll talk about is, in a few weeks, I have to tell you, you got to do it. The IRS is going to tell you to do it. Mary Kay is going to tell you to do it. And what is that? Inventory. That is correct. But it is my experience, and a lot of experience, that what do most folks want to do on December 31st? And I don't believe the Colorado Springs area is any different. What do they want to do on December 31st is what? It typically involves spirits. That's correct. So if given the opportunity to count inventory or to count liquor, what do we often choose? That is correct. So living in the world that I do I think that most of you will do it? Probably not. So again, living in the real world, I wish you to at least do something for me. If you're not going to do it that day, at least do this. Estimate what you think you've got. Spend at least 2 minutes and estimate what you think you have. That is better than doing nothing. Now you gotta do it, but I don't really expect you to. But if you do it, that's great.
Let's do it on the 30th.
You can do it on the 30th. That doesn't matter. But when do a lot of people want to do it?
July.
April.
Never.
Right before they send me their information. So would that be correct? No. But this is something else. If you don't do it on that day, of course it's not going to be right. But what do a lot of people want to do with free product? And we still get free product, don't we? We got biz builders now, right? But for a lot of you ladies, you still get free product. Either with new consultants or with when you go to leadership, when you go to Dallas, you get free stuff, right?
Right.
So, what do you want to do with that free stuff?
Use
Give
it,
it away.
demo it, use it, give away.
Keep it separate.
Keep it separate. Were you there? You were there last year, weren't you? No, you weren't. You're smart. You want to separate that stuff out and you want to put it in a magic box. Why do you want to put this free product in a magic box?
You don't want to count it.
You don't want to count it. Why don't you want to account for it? You never paid for it. That's correct. But what do a lot of people want to do with it? Blah, blah, blah. Don't sell it. Why don't you want to sell it? Because Mary Kay gave it to you for a reason. Why did they give it to you? To sell it? No, they gave it to you to use it yourself or to demo it. So what you do is you put it in the magic box, and what happens to the product in the magic box? Just a moment. What happens to the product that goes in the magic box? It does what? No, it does not collect dust. If it's in a magic box, it disappears. There's no more product. Because when it disappears, I don't want to know nothing about it. But what should you do with it? Demo it, personal use it. I don't care. But at the end of the day, I want nothing to know about it. Nothing.
Why? Because you don't want to pay taxes on something you didn't pay for.
Well, no, what's going to happen is this. If you include it as part of your inventory, these are 2 examples of what will happen. If you overstate or understate your ending inventory. And who cares about ending inventory? Who cares? You don't care. Honestly, I don't even know that I care. But who does care? That is correct. So, these are the 2 extremes about having a goofy ending inventory number. First one is that per the numbers on the return, you sell no product, and then you give them $1 to take it away. Is that possible? Please shake your head no. It's not. You're not going to, for every product that you sell, you're not going to give them $1 to take it away. That goofy, right? Yeah. Yes, just like the big dog with Mickey Mouse, it's goofy. What's the opposite extreme of that? Not even typically. How much can you possibly make per item that you sell? Can you make more than 50%? No. Can you make 70 or 80%? Yeah. Absolutely not. If Mary was still alive, she couldn't sell the product for 70%. Those are the 2 extremes. One extreme is you're giving them $1 to take the product away. The other extreme, you're making 70 or 80% on every item that you sell. We know that either situation is not possible, right? But how did those numbers actually show up on this person's return? Because of a bad ending inventory number. Again, nobody cares about it, but who does? The IRS. Do you want to try to ever convince the IRS that you're giving money to people to take away your product?
No.
At the opposite extreme, do you want to try to convince them you're making 70 or 80%? No, you don't. And all this has to do with a bad ending inventory amount. That's the whole purpose of all of this stuff. So we're going to help you with this. We're going to help you. You give me an approximation of what you think you have, and if it's really off kilter, then we'll call or email you regarding it. Oftentimes we'll do this, and what is the typical my client's response to this? If we ask the question, is it possible your ending inventory is off, what might they say? Maybe is correct. Maybe.
Is that wholesale then?
Wholesale. Wholesale. Yes, you had a question.
It's null and void.
Null and void, okay. Any questions about ending inventory? It means nothing to you, but it does to the IRS, and we're going to help you with this. You spend lovely hours with your spouse dealing with this, you go to the guy down the block, not going to get it, not going to understand. So this is where we help you with this. We know what the numbers should be. We know what exactly they should be. So we can definitely help you with this. Any questions on any of that? Next area is income. Thank you. Next area is income. You ladies should be going gangbusters in the next few weeks. With what? Sales. Who are you going to sell to? That is correct. Husbands. Men specifically, why? Why do you want to sell to the men?
We don't have anything yet.
We have no idea what to get our wives.
We have no idea. That is correct. So at the end, the point is that we haven't any idea, ladies. So what do you need to do? You need to go find the men. Where do you know where the men are?
We know the wives tell you.
We all know where the men are, right? You just go find the men. Go find them. And what you do is you put it in a nice basket, you put a bow on it, you wrap it all up, put one of those loofah things in it, make it look pretty, right? Make it look pretty because, again, the men ain't got no clue. But that's good for you. Ignorance is bliss, isn't it, ladies? You sell for full retail, all the items you pull with it are expensed. Boom. Easy pickings. Gotta go find them. There's my marketing suggestion for sales. Should be going crazy right now with those. So, what's the second way in which to make income with Mary Kay? Commissions directly from Dallas. So if you get a 1099, do you have to file?
Yes.
That's correct. This is the thing, I get asked this question often. Do I have to file? If I make $100, if I make $200, do I have to file? And here's the answer, ladies. I don't care what you've been told by your uncle with infinite knowledge about taxes, your neighbor, the cat talks to you every once in a while. This is what is true and correct. If you buy something for $5 and you sell it for $10, you have to file. Does that make sense?
Yes.
If you buy it for $5 and sell it for $10, you've got to file. And that's it. If you sell it for more than what you buy it for, you gotta file. So that's the first thing. The IRS is telling you gotta file. The second thing is that if you're out, well, I use this example everywhere that I go, but if you go out and what my mother refers to as gallivanting, if you're out gallivanting around, delivering product, going to meetings, you're telling your husband you're making money, you're doing this, you're doing that, and now he has to take care of the kids, he's got to put them to bed, he's got to clean, he's got to do this, and then at the end of the year you don't file, but yet through the entire year you've been telling him you got business. But if you ain't filing, do you have a business? No. You ain't got no business. So your husband's going to ask you, why are you out doing all this if you ain't got no business? You say you got a business, but I ain't seeing no business. Does that make sense? So the first reason is the IRS is telling us we got to. Second reason is the spouse is going to question why you out doing what you're doing. Third reason is you buy a home, you refinance a home. You tell the bank, I'm doing well in Mary Kay. It's a second source of income for me, the third source for the family. I'm making money. If the bank is going to look at your tax return, aren't they? If you're not sure, oh, they do. And the thing is, if you tell the bank all these good things about your Mary Kay business, and if you don't file, do you have a business as far as the bank is concerned? Again, you ain't got no business. So the first reason is the IRS is going to tell you. The second reason is your spouse. Third is the bank. And what's the fourth? For most of you, for 99% of anyone in any new business, in the first 2 years, you're going to show profit or loss.
Loss.
Are you ladies any different in this?
No.
Absolutely not. On paper, you're going to show a loss. So that loss is going to reduce the family income, which is going to reduce the family tax, which means what at the end of the year? Typically a larger refund. Does that make sense?
Yes.
So you take that money and reinvest it back into the business. But if you don't file it, you don't need to be reinvested in anything because you ain't got no business. Those are the reasons you got to file. Does that make sense? A lot of people is going to tell you it's going to take thousands of man hours to file all this stuff, and it's going to cost thousands of dollars, and both are inaccurate, and I'll explain that in a little bit. But that's who has to file. Any questions about any of that stuff? Next area I'll talk about is a lot of people, whether you've been in business for 20 years or 20 minutes, a lot of people want to consider this the worst aspect of being in business. Anybody has any idea what I'm talking about? Paperwork. Paperwork. Now, there's two extremes in any business. Two extremes. One involves what?
Nothing. Nothing.
That is correct. What's the opposite extreme? Charts and graphs. What? Should you do nothing?
No.
If you ain't got no business, you go right ahead. But what's the opposite extreme? Charts and graphs. Do you need charts and graphs?
No.
No. You need to meet her kids. You don't need no charts and graphs. I'm an accountant, for God's sakes, and I don't even do charts and graphs. Now, if that's what you need to do, that's fine. What should you be doing instead of the charts and graphs? Making money. It's time. All right. I spoke to a young lady last evening, and she said she spent 40 hours bookkeeping. 40 hours. I didn't realize that she had 2 used car dealerships. 40 hours. Oh my Lord. I said, dear, what are you doing? Well, I'm pretty detailed. I said, yes. You have a payroll of about $1 million to spend 40 hours? No, that's craziness. How you do this is there's different categories. You put them in the different categories, your expenses, and that's it. And you collect them through the year. We've had this for several years now. This is our expandable file. In this are the different categories. So where do you want to put this?
In your car.
In your car, that is correct. Why do you want to put it in your car?
No, you always have it
You always have it because you collect most of your receipts
on the bill.
in the car. That's correct, because if you don't, you put them in here, where does your receipts typically end up? I typically refer to this as rabbits. What do I refer to as rabbits? Purses, because they reproduce. So if you got lots of rabbits / purses, that means you got lots of places to lose, not stash. Not stash nothing. So if you're losing what?
Money.
Whose money?
My money.
It ain't your neighbor's, it's your money. So you got to remember this. So if you put them in your purse, typically they're gone. And where else do they end up? If they don't end up in the purse, they end up on the floor. They end up in your console. And typically, what do we have in our console?
Trash.
Exactly. But every once in a while, we need a piece of paper. We need this piece of paper because we're going to try to recruit somebody. So we're going to go to the local restaurant. Now we've applied a fresh layer of lipstick to our lips. Now we're going to be looking for a piece of paper, aren't we? Then after we get done kissing that piece of paper, we're gonna molest it even further. Because we're gonna put a piece of gum in that, aren't we? If ever questioned, do you want to show the IRS a sticky kiss piece of gum? I'm joking, but I am not. I'm really not. Because have I seen this? Yes. McDonald's receipts with you ladies are very popular to do that with. I don't know why, but... So, you keep it in here, and then at the end of the year, you got all the different categories. You simply add up the different categories. Boom, it's done. That's it. These are not by month. Not by month. By month is charts and graphs kind of thing.
The whole year? The whole thing?
Yes. Daggone all year. Now, for some of you, if you're a Red actor or director, it may not contain everything. But what this does is that if it does get dog gang full, I'm sorry, dude. But if it gets full, you just simply take it out of that, put it in another envelope or something. But this helps you keep from losing it. At the end of the year, you take this with the different envelopes, you add them up, and that's your bookkeeping. That's it. Easy peasy. Short and squeezy. Not difficult at all. So, any questions about how to bookkeep? Any questions? It's not that difficult.
What are the
The
categories?
different categories? Oh, I've got the handouts out here. I just haven't passed those around yet. So,
We like paperwork.
yes. Yes. So the thing is this. Is it difficult?
No.
It's not difficult at all. Not difficult at all. That's how to bookkeep. Or if you don't want to do it, you simply hire us as a consultant, $45 a quarter. $180 a year to bookkeep. This is bookkeeping. This is bookkeeping, not the return, just to bookkeep. $180 a year. As a consultant, how long does it take you to make $180? In the next 3 weeks? Maybe an hour. And how long is it going to take you to bookkeep? Many hours. So what should you be doing instead of bookkeeping? You should be doing what? Making money. Paying me, I like that too. As a director, it's $360 a year. How long does it take as a director to make $360? About an hour. And that time you should be doing what? Making money. And all of that's completely deductible. So if you don't want to do it, we'll do it. But who's the last person you do want to do it? The bookkeeping with?
Your husband.
Your spouse, that is correct. Why is this the last person you want to do this with? I'm not suggesting he's going to do it wrong.
Because you hate each other.
What typically will happen is that he may ask questions, right? Do we want our spouse to ask all sorts of questions about your business? Am I suggesting keeping secrets from your spouse? No, I'm just kidding. Of course, don't hide anything from your spouse. But the result is this. If he starts asking questions, what might this lead to? What house do you live in? Wow. You people are crazy. Marital discourse with him leading to crying. So, you give it to us, we take care of it all. But why is the spouse the last person? Is because too many questions are asked, could be all sorts of issues. As an example, had an audit come in about 1.5 years ago. It's a director locally for us. We've never done a return. They got one of those special letters from the Internal Revenue Service. Well, I asked them to provide me with their receipts. And they did, but how did they give them to me? What did they come in? Nike and Reebok, that is correct. So when I got the Nike Reebok, I looked in there and there were receipts, but what was missing from the receipts?
Totals.
Exactly! So where did the totals come from? They looked upon the sky and they fell upon them. I have no idea where the totals came from. So, We ended up backing into what was on the return. That worked out okay. Couldn't back into his numbers because he did it so wrong. We went through the audit, and what did they originally owe? 20 grand. He did it very wrong, and he understood that. I told him nicely, and he seemed to smile and nod. We went to the audit. I basically told my clients we just simply bargained with them. So instead of 20, got him down to 8.
Wow.
That was wonderful. I was quite proud of myself for that. It's only money, isn't it? We couldn't do away with the whole 20 grand. We couldn't do away with the 8 because he just did so bad on it. So this is an example of where do you really want the spouse doing it? I'm not suggesting he's going to do it wrong. Husbands, don't take it personally. But I know more about this than you could possibly ever imagine just simply because this is what I do. Alright? So, that's how to bookkeep. Easy peasy, nothing difficult about it. Next thing I'll talk about is typically, what's the largest expense on your return? On your business return, for most of you. Any idea? Advertising, no. Driving, mileage. So when it comes to your mileage, folks, it's not that difficult. A lot of people want to consider this the antichrist of the bookkeeping world. But there's 3 things you got to have. You simply have to have your date, where you went, miles, that's it. Date, where you went, how many miles.
So MapQuest works fine.
MapQuest is fun. If you want to print out a MapQuest every time you go, just make sure you got the date. If you went on that date, of course the date's on the bottom of it already, but whatever, it's got to have a date and the purpose of going. That's it. That's all you got to do. A lot of people don't want to do it, but it's just that simple because it's worth money to you.
Does it have to be a piece of paper?
It's-
Like I have a log in my computer.
You have to provide, if ever asked, a piece of paper. The IRS does nothing in the way of electronics.
Okay.
They are pathetic in that fashion. But, so when it comes to this, those are the 3 things you need. Now, in addition to that, you need 2 things. I'm sorry. You need 2 things. They're basically the same thing, just twice a year. You need a third-party write-off of your odometer reading. What is that? You just simply have somebody give your odometer reading. It's got to have their letterhead on it. At least twice a year. Middle of the year, toward the end of the year. If you say you have a spouse that insists on doing all the maintenance, I don't care if you have maintenance done or not. It's got, the odometer reading's got to be by a third party. Does that make sense?
So when you go to get an oil change, you
Beautiful.
use the odometer?
Don't care what it is. Doesn't matter. When you buy a car, when you do your front end line, brakes, whatever. Yes.
I have 2 businesses. And
Yes.
they both entail a lot of driving. How do I differentiate that?
2 different mileage logs, 2 different whatever. That's it.
What about the mileage if I do 2 businesses in one?
She's asking, do you split them up? I don't really care. This is what's most important about this. This is very important. Now, when it comes to me, Tiernan and Associates, this is a huge deduction. There's 2 things that we evaluate to determine if your mileage is correct. Anybody got any idea what these 2 things are?
Common sense.
Income. Gosh, yes. Isn't that so simple? Common sense. But the first one is income, and the second is where you live. In this area, is it possible to sell $1,000 and drive 5,000 miles in the first year?
Yes.
Very possible. Colorado Springs.
Yeah.
Now, the folks north of you, the folks north, Wyoming and Montana, this is where you see mailboxes and you see no homes. They're beyond the cattle in the hills. But for those people, is it possible to make $1,000 and drive maybe 8,000 miles? Because ain't nobody lives there. I love those states, but there's no one there. You talk to more cows than you do people. But those are the 2 things that we always evaluate. And we were preparing a 2010 return for a lady. And when we ever prepare a return for somebody that we never did a return for, we always look at the prior year. So we did the 10. But in doing the 10, I had to look at the 09. It was the worst return I'd ever seen. Worst tax return I'd ever seen. And this is a copy of it. Worst one. And why was it the worst one? Well, remember when I said you give people $1 to take away your product? Remember that and how that was so goofy?
Yeah.
Well, this woman had negative $1,500 worth of that, okay? Negative. Gave people money, I guess. Then, how many miles did she have to drive? Oh, I'm sorry. How many miles did she have to drive to make that?
58,240.
So what did she show as a loss? Total loss because of her Mary Kay business.
36,900.
Wow.
How much did she get back on her refund?
Wow. 13,267.
That sounds good, don't it? I'd go to jail if I filed this. That is the worst tax return I'd ever seen, folks. She drove 58,000 miles, made negative money. That's how much did she get back? How much should she have gotten back? She done it right. $2 grand. It was only overstayed by 11. No big deal for the federal government, is it? For you folks in the military, that ain't no big deal, is it? So, the thing is, she drove a little bit, right? Where'd she come up with 58,000 miles? That's the worst part. She lives out of Seattle. Seattle this big, right?
Drive across country?
No, she didn't drive cross country. What did she do? What I think she did is, I got this from one of my seminars last year, she just simply took the odometer reading off the car, right? Is that an issue? Is she going to have issues with the federal government?
Yes.
Because is she only going to owe the $11,000 back? Interest, and more importantly, the IRS, they would not do this. I truly believe they would not do this, but they could consider this fraud. Do you think this lady meant to cause fraud? Of course she didn't. But what did she do? Well, let me back up. Who did the return?
Her husband, right?
I don't know. I don't know. She didn't say. But either her or her husband did the return, because on the back of the 1040 it said self-prepared. Now, she didn't mean to do it, but the IRS could consider it fraud. But she's going to owe the money back, and I'll guarantee that. So what I did is I suggested to her she needs to amend the return. And did she amend the return?
No.
No, she has not. No, she has not. I haven't gotten any letter yet. So, my point is this. Do it yourself. 90 bucks. No big deal, right? $90, get 13 grand back. Woo-wee! We could go see Mickey and Minnie. But the problem is, was it done correct? God, no. It was done terribly. I would have fired myself if that return would have left my place. So the point of this is that we're going to charge you more than the $90, but something so simple. Now, was the software program wrong? Of course the software program wasn't. But that input is just a bit important, isn't it? It's just a little important. So, is mileage a big deal?
Yes.
Absolutely, it's a huge deal. Huge deal. Next I want to talk about briefly is, I think, consider a recruiting tool. Things that you can depreciate, things that cost more than $100. Things that might get your recruits excited about being in Mary Kay. There's one item that my father's used for years as an example, and I continue to use it. What is 100%? It's the only thing you can use 100% of the time for your business. And that is an item that displays your product. So, where do you want something that displays product?
By your front door.
By the front door. And why is that? Everybody sees it, specifically possible recruits, because they're going to say, wow, what a beautiful piece of furniture, and you're going to tell them now you can afford it because you are in?
Mary Kay.
Absolutely. Is that a recruiting tool?
Yes.
Yes, it certainly is. It certainly is. You couldn't write this thing off anywhere else.
What is it? I'm sorry.
What is
It's
it?
just a bookshelf, a shelving unit, something of that nature.
What about that big TV at Scott?
Is a TV, that's the second example that I use. Is a TV depreciable item for you ladies?
Yes.
Yes, it is. How can it be an expense for you? It's a recruiting tool, it's an educational tool, it's all that good stuff. Now maybe you can only write off a few percent, but is a few percent better than nothing?
Yes.
Well, is this an incentive for the spouse to be excited about you being in business? Is this a recruiting tool?
Yes.
Absolutely, absolutely. So, what are you typically going to depreciate? Maybe not a shelf, maybe not a TV, but the iPads and the computers and all that good stuff. So when it comes to this, all you need to do is to tell me what you bought and when you bought it, and that's it. I'm not even going to suggest to you how much as a percentage to use. I will determine that if you're not sure. How am I going to determine how much of that you use for business? That is correct, your income. Because if you simply make $100 in a full year and you've been in it for 12 months and all you make is $100, do you need an iPad?
No.
You use your toes for numbers and the back of your hand for names and addresses. You don't need an iPad.
Yes, I do.
So, the more money you make, the more things you can have. Have we been told that before?
Yes.
Is this an incentive to do well in this business?
Yes.
We've written off boats and cabins. Who can write off a boat and cabin in this business? That is correct. As a new consultant, can you write off a boat?
No.
Only the one that floats in the bathtub, so you ain't going very far on the boat. But this is an incentive for you to do well, because can you write boats off with your W-2 job? No, absolutely not. Absolutely not. Any questions on that? Huge recruiting tool, I think. Neat stuff that you can have for business purposes. Next thing I want to talk about, yes?
If, say your first couple of years of business, if you keep putting all your profit back into the business and you're showing a loss, can you still write that stuff off?
He's asking, can you still show losses after a couple of years, basically, and depreciate things of this nature? Yes. The question is, are you actively running it? That's the question. Are you keeping track of your records? Are you going out there and trying to make more money? Things of that nature. So yes, that's possible.
I was, because you said you're basing it off of your sales as to how much.
That
you
is
write
correct.
off.
Yes.
But
If your sales continue to, if your sales go down,
if your sales are up, even though your profit's down,
it's still possible, yes. The thing is that as long as you're actively trying to make the money,
Okay.
that's the key. That's the key. Next thing I want to talk about is me. The thing about that's different than us is your niche. I've already explained that. But I all want you to do exceptionally well. I'm going to help you as much as I can. A lot of the questions you're going to get asked now is, what about I'm on unemployment? How are you going to answer that question? Somebody comes to you and asks you these questions, you've got to make sure you're right. Because if you're not, you tell her something different, you might have a problem. Because if she loses some of her unemployment because of you, who are you going to have to deal with?
Her husband.
That is correct. So do you want to tell them things incorrect?
No.
I'm going to try to recruit her in this business as much as you are, because she's your recruit and now she's my client. So I want to help you. I want all of you to drive pink Escalades.
Woo!
Why is that?
Be national.
Yes, why do I want you to drive a pink Escalade?
You become a
Bring you
You make more money, but by you making more money, you know more.
people.
You can't know enough women. I guarantee you of that. But the more women you know, the more women I know. Does that make sense? So I all want you to succeed. Guy down the block, care less. He only has 1 or 2 people. And the thing is, most of other accountants, do they know anything about your business?
No.
I had a seminar a few weeks ago locally, and these people brought their accountant with them. He asked me, well, how does Mary Kay determine your sales? Did you all get that? Because I didn't get it when he first asked me that question. And then he asked me about, well, how do you account for your personal use? And I'm thinking, buddy, you just be quiet because you ain't got no clue what you're doing. Does Mary Kay account for your sales?
No.
No, he does. No, they don't. They have no idea what your sales are. And I keep thinking, his client's sitting right beside him was like, dude, you ain't got no clue. So the thing is that I don't know about smack. I certainly shake my head. You know, it is actually very clear now. It's all very clear to me now. But even if, the thing is, if this accountant doesn't understand your business, how is he going to portray your business as good or good or negative? Negative. And if he says that you're just going to lose money in this business, how long you'll be in this business? And if your crew here's the same thing, how long is your crew going to be in this business? Are we ever going to suggest you making or going to only lose money? No. Here's a young lady who suggests that that is not true at all, and I know quite a few of those. So we want to help you, and tax-wise, we know your business better than you do. I guarantee it. And we're economical. You have a very simple state return here in Colorado. On average, when I say on average, this includes your personal return, and that includes people in the military. We do lots of military. That includes your W-2 job. That includes Mary Kay. That includes the state of Colorado. On average, it's anywhere from $150 to $200 for the entire tax return. $150 to $200 on average. Now, if you've got investments, childcare, and things of that nature, it might go up. But we're still exceptionally economical, and we're almost half as much as the franchises. Now, are we going to be more in that box you get it off the supply store? Yes. But can you walk away with big, big money from the IRS? Yes, you can. Will you get letters? Yes, you will. Will that end up in marital discourse? Guaranteed. You don't want to go there. So we know what your numbers should be. If your numbers aren't where they should be, we will call you. We will ask you. If you do this with the guy on the block or your spouse, you ain't got no idea. There's no way for you to know. I know because of the thousands of returns I've done and all the time involved. All that, and we're exceptionally economical, and we want you to succeed. This is all that we do. There's no mechanical engineering. There's no roofing involved in my office. This is all that we do. We're there all year long. I have 7 full-time employees.
7?
Yes. And then we got 13 during tax season. So this is all that we do. All we do. That's a big vote of confidence. All right. No, we're very good at what we do, and we've been doing it a long time. A lot of husbands always wonder, well, they just fly by night. We've been doing taxes probably longer than if you've got an accountant, longer than they've probably been in business. So we've been doing this a long, long time, and we're economical. Next thing I want to talk about is how to take a vacation. No, I don't want to take a vacation. What about a business trip? We all know how to take vacations, business trip. Easy peasy. What's the main thing you got to do? Sell recruit. So what you got to do is you got to have the intent to do business before you do business. The intent to do business before you do business. What does that mean? I see them out there in the hallway. That just simply is invitations. You make one up. You want to go to Phoenix. You've got a mother or something that lives in Phoenix. You invite 15 people, 7 show up. With those 7 people, you got to do what?
Sell.
Or
Recruit.
what would you rather do?
Sell.
Recruit. Why would you rather recruit? You got to go back. That's correct. Now, when you're there, at least sell $50 a day, $250 a week. $50 a day, $250 a week. Or recruit 1 person per week. This is not IRS code. This is Tiernan and Associates telling you got to do something when you're there. If you drive there and your product just sits there and collects dust, and the product just sits there and collects dust, you ain't got no business trip, you got a vacation. And we all do vacations. Now, this is the neat thing about this, folks, is when Mary wasn't alive, she suggested to recruit how many different places? 5. This is the neat thing about this. Where was I today? You folks may not think much or think it's different, but last year I went to Pikes Peak. Where did I go this year? Royal Gorge. Wow. I think I'm not a manly man, but wow. I'm driving across this thing and all I'm hearing is boards moving. wow. And I text my wife on the other side, it's like, oh my God, oh my God. That was rather impressive. I did not really understand the world. That was pretty cool. That's what's neat about being in this business and going anywhere. Everybody get that part?
No.
You can't do this with your W-2 job.
No.
I know a lot of you people are in the military and you go to Afghanistan. Well, I don't know how exciting that is. I've never been there before. That's pretty much what I thought. But with this business, you go anywhere. And that was really stinking neat. I walked to the middle of that thing and I thought I was going to wet my pants back in a few minutes. It wasn't a problem after a few minutes, but I thought, God, I could climb over this thing and just go a million miles down. And then between those boards, there's like an inch. I mean, I'm like I'm taking pictures, but I'm holding my cell phone like for dear life, because if I drop this thing, my wife's going to be mad at me. But oh, I can't contact my wife and I'd be home. But no, that was really neat. I thought Pikes Peak was interesting because you drive and you can't see the end of the road. That's always interesting. But this was, wow, that was pretty neat. We don't have those in Ohio. So. But again, my point is that it's fun. When I flew here, that's deductible, my hotel stay, rental car, all that. That's what makes this, one of the things about this business, fun. Take advantage of it. But to take advantage of it, you got to do what? That's the thing. What am I doing tonight? I'm selling a couple things, but what am I really doing? Recruiting. Same thing you people do. Same thing. Now 3 years ago, every year I spent at least a week in Florida in January. What did I do 3 years ago? Who did I take? Not my father. I went to Florida with my father several times for business. Who did I take? I took my wife. I took my 4-year-old at the time. Mama said she'd go and see Mickey. I had to take Mom to go see Mickey. Now, was Mickey deductible? No. Has anyone ever ate at Cinderella's Castle?
Yes.
Yes. Are you still paying on it? For 3 of us, it was $136. But the 4-year-old Mom was happy, and as the men go, that's all that matters, isn't it? Did I write off did I write off Cinderella's dinner? No, I didn't. I really wanted to, but I didn't. So, getting there is great. Working is great. Huge advantage of being in this business. Yes?
Now, if we were on vacation and say we were more chatting the hostess or something, at what point does it become business?
Okay, she's asking, what if you didn't have the intent to do business before you do business?
Make your floor down.
A lot of people, it's very popular with cruises. A lot of people go on cruises and make money, but the thing is you gotta have the intent before you went.
Okay. Like
That's the
communication
kicker.
with someone else?
Yes, that invitation that you ladies get a lot for career conferences, directors and things of that nature, director debuts. Those are the type of invitations you gotta send out.
Can you just post
So
it
as
on
long
Facebook?
as you,
Can you post it on Facebook? As long as you print it.
so as long as you have documentation, does it have to be post-dated?
So
Yeah.
everywhere I'm gonna go.
The date really needs to show up somewhere. Facebook is great, as long as there's a date on it. That's fine, I don't care. Gotta be a date. Next thing we want to talk about is using part of your house.
For the business trip, really quick, what do we have to say for you?
Oh, what do you gotta say for a business trip? I'm glad you reminded me of this. I don't want anything. This is for you to keep. You need to make sure you keep your name badge. Ladies going to Hollywood need to keep their name badge. Sounds silly, but the IRS eats that stuff. They love that stuff. Then you keep an itinerary of what you did when you were there. Put notes in your day book. This is company sponsored, so if it's company sponsored, do you need to make money? No, but you gotta prove that you were there and you were actively doing something. And that you just weren't in front of the Man's Chinese Theater. You gotta be doing something when you're there. Using your home as part of your business, it's a wonderful deduction. A lot of accountants don't like taking it because they don't understand it. Taking part of your home as a deduction is a wonderful benefit. Why? Because you're going to spend the money anyway, and now you get to write some of it off. And this accounts for either you rent or you own. The biggest thing is making sure that you use this, that you're accounting for the square footage correctly. Because a lot of people want to take like 50%. And if you're married with 2 kids, can you possibly use 50%?
No.
If you are, little Mary's using your roll-up bag as a pillow. And that is not possible. That is not legitimate. That's where people have a lot of problems when it comes to using this deduction. So as long as you account for the percentage correct, you got it. You're good to go. Good to go. But it's great. You just got to collect the stuff. Like utilities, repairs and maintenance, all that stuff. You collect it, you account for it, you can write it off. Yes.
Or an office?
Yeah, that's what I'm talking about. You use a specific
Just one
room.
space, one room? Not a quarter.
It's a great deduction. Huge deduction. Next thing I want to talk about is a lot of people.
How they factor that percentage?
Oh, basically you just take the square footage of the room that you use, and then you take the square footage of the house. That's it.
And that's to be used like exclusively for that.
Yeah, it's got to be Mary. Yeah, it's got to be Mary Kay stuff. No kitchens, no dining room. The IRS does not like the word kitchen or the word dining. But like a 3rd bedroom would work great. Yes.
I use my dining room for it, but I have like a shelf in there with all my products, and then I use the table, and then my computer's in there, so it's like an office.
So does she have an office or does she have a dining room?
Just an office.
There you go. Now, yes,
I have a question on the house.
yes.
I've always been told that if you deduct part of your house, that if you sell, that comes back as depreciation or income or something?
Right, you have to recapture the depreciation, and that is true. But the thing is that it'll be considered a capital gain, but when you sell it, there may be capital gain, but the tax associated with that isn't going to be as great as the tax you save when you take it. Does that make sense? So the immediate benefit's going to be greater than the future cost. Does that make sense? So, what does Mary Kay say is deductible when it comes to clothing? What does the corporation say is deductible?
Shoes.
Nothing is deductible as far as the corporation is concerned.
No uniform?
There's a tax essentials, a section 2 item. You actually get the book. If you need something to sleep with, you read that. Mary Kay specifically says nothing is deductible for attire. That's what the corporation's stance is on that. Thank you. However, there are 4 things. I'm going to tell you the 4 things based on my knowledge with the IRS. These are the 4 things that are deductible. What's the first one?
Fairs.
Director's suit, yes. Somebody say the H word.
Hair.
No hair.
No, red jacket?
No hair. Red jacket, that's correct. 3rd. Beauty coat. 4th item.
Red?
No.
Sorry again?
Beauty coat. Beauty coat.
4th item is anything associated with MK connections. Those are the 4 things, and that is it. Those are the only 4 things that you're going to get. What do all 4 of those things have in common? The receipts are from Mary Kay. That is correct. There's one accounting firm that suggests you can have 1 pink suit. And when I think of that, I think of the Easter Bunny. Now, if you want a pink suit for the Easter Bunny, that's wonderful. But is that deductible? No. If you want that, you get the big shoes and the floppy ears to go with it. No pink suits. Those are the 4 items. Now, how do I know that those 4 items are correct? Because I won with them at audit. Anything else ain't gonna work. I don't care who you talk to. It don't mean nothing. These are the only 4 items that you can have. I had, this past year, had an audit for a national. The audit went pretty well, but the auditor had a question about her suit, her national sales director suit. How much do you ladies have any idea how much that suit costs?
A lot.
A lot is correct. How much?
2.
Almost. $2,500. You say that's a lot of money, but what were our commissions from the company? A couple $100,000. $25, not that big a deal. But, so the auditor asked me about this. Suit. And he asked me the question, did it have Mary Kay on it? And does it?
Does it says, it usually says.
Says right in here. It does. Dude, and I said, it says Mary Kay on it, doesn't it? I wasn't lying to him. I said yes, and then he asked me, was it on the back? And I can only imagine. Can you imagine? It says 01 on it. Well, what did I respond with that?
Yes. On the back.
Nothing. He said it wasn't on the back as if it was a jersey, and I said nothing. But a lot of people would have wanted to argue that fact, right? Did I argue the fact? He simply answered his own question. So, do you always want to blah, blah, blah?
No.
So if you deal with us, and you get one of the special letters in the mail from the IRS, which I'm very proud to say, of the 3,000 returns we filed for 11, no audits. No audits, yes. Most accountants can't say that. So, of this particular audit from last year, again, it went pretty well, but I did not say anything in his response. Or a lot of people said, oh no, it's on the blah, blah, blah. No, you don't want to go there. You just smile and nod. And that's what I did. There was no problem with it. But my point is that if you deal with us, you have every right to go. But am I going to take you? No, I don't want you to. Why?
You gonna blah, blah, blah.
As a quick example, several years ago we had an audit. And they had a haunted trail. And they had income that was an issue. And I really felt it was important for them to go. First 2 questions out of the auditor's mouth was, what about the children? You could have claimed the 2 children. And the mother's response was, well, I don't know if we should have claimed her. That one comment cost them $800. That one comment. Now they could have claimed her by right, but they never disputed it. I have no idea why. I guess they just wanted to donate money to the IRS. But that one comment, nothing about the haunted trail, cost them $800. The funny thing about that is that the IRS allowed liquor use. They actually accepted, they bought 2 kegs. And they took that as an expense. The kicker is this. Who did they hire? Kids! I always thought that's funny. So, you deal with us, don't have to go to audit, you don't have to blah, blah, blah. Alright? So, I've got 4 things on which to sell. The 4 things are, the first one is, if you deal with us, you have to have an organizer. You have to have this. This organizer itself is 30 years old. It's updated every year, and it's as user-friendly as we possibly can get it. Thousands of Mary Kay have filled this out over the years. Thousands. You simply take it page by page. The first part of the book, personal tax questions. The second part is your Mary Kay. You fill in the totals. Then you send us this organizer to us. When can you send it? First week of February. With your W-2s, whether they're military W-2s or whatever. You send all that to us, within 7 to 10 days you get an accurate, inexpensive return. It only takes 7 to 10 days. If it takes longer than that, we've got questions for you and we should already ask. Now, you get an accurate, inexpensive return, then what do I get? Exactly. So it does not take months in which to get this done. It doesn't take a long time. You fill this out to the best of your ability. If you got questions, don't hesitate to call or ask us, call or email us. Now I only got so many of those. So for some of you, what you're going to get for $5, you're going to get sheet paper. Sounds exciting, doesn't it? But on this sheet of paper, it's got our website and it's got a username and password. Because the 12 books aren't even out yet. We haven't even created them, and why is that? Because the blessed Congress. Typically, a lot of people are even going to file on time, or file before February 15th because of the Congress, and that's a long story. But anyway, what you're going to do is in January you'll have access to the 12. Before then, you can always get the 11 book. But what you're buying here is the access for $5. Those folks who are already our clients, you'll get a username and password in January. Does not cost anything, it's free. One-time charge of $5, one time. Once you're a client, it's free to you from that point on. Second thing which I have are mileage logs. These are $3. If you don't use this, use whatever you wish, it doesn't matter. But it's got to be documented in some form. Third thing I have is this expandable file folder. This is $15. A lot of people will say, well, I'll just do this myself. You won't. I guarantee it. You say you will, you won't. But this is $15, the tabs are already included. Blue, green, and purple on that one. The last thing I have is a DVD of doing what I'm doing here tonight. And that's $20 for you to listen to me again, right?
No.
No, you don't want to listen to me again. But that's for people who have questions. That's for people who have a recruiting tool, for them to listen to me, for their spouses to listen to me, and hopefully answer some of their questions. Those are the 4 things that I have. Now I'm going to be here as long as you folks are. But typically I always have somebody that comes up to me and says, well, I haven't filed in the last several years. Just pass those around, please. Almost every seminar, I always have somebody who says, I haven't filed. In December of 2010, I had a lady that called me. She was crying. Why was she calling me? Why was she crying on December 10th of 2010 or December 5th? The last time I talked to her was in 2005. The time before that was in 2000. Anybody have any idea why she was calling me crying? No, what's worse than being audited?
Not filing?
The IRS did what to her?
Garnish, levy.
They took money out of her account. Why did they take money out of her account? Because she hadn't filed since 1999 was the last year she had filed. So at this time she had 9 returns to file. Why didn't she file it? She just doesn't want to file. So, what did the IRS do to her? They took money out of her account. How much money did they take out of her account?
All of it. Everything. Minus.
They took everything. How much was in the account? $136,000.
Oh, wow.
So, in 10 months we filed how many returns? 10 returns. How much does she currently owe?
Probably
More than
not
that.
as much.
She almost owes $160,000 as today. Now I gave her the only thing that I could think of, and I discussed this with other people in my profession, other people in my office, the only option I could give her to do away with the interest and penalty, because the penalty alone is about 50 grand, is to basically say to the IRS that I have a mental problem. Sounds silly, but literally this is all that I have. This is all that I read up on. This is all that people could tell me. And I told her, you've got a very slim chance of winning this. But I get at least two doctors to tell you that you have a mental problem. And a plan of action.
She does now.
She didn't want to do that. I emailed her on Thursday. I said, we need to get basically a financial statement from you. She was supposed to have gotten that to me. She emailed me yesterday and she says, Jody, I don't want to look at it. She doesn't want to look at it. She doesn't want to deal with it. She doesn't want to deal with owing $160,000. She knows that.
Yeah, friends be called crazy.
So, I'm pulling teeth to get this financial statement because I promised the IRS, I called them on this on Thursday. So I don't know what we're going to do with that. It's a bit of a concern of mine, but it's only money, isn't it? So we can deal with that sort of things. We can deal with that. Is that a bit extreme? Yes, but she does very well in this business. And she didn't file for a long time, and for whatever reason, the federal government just doesn't seem to be very happy with that. Again, I will be here as long as you are. I have handouts up here that you can get. I've got stuff for sale. And if you've got any other questions, I'll be more than happy to take care of them. Real quick, this last week I did my first tax chat. What was a tax chat? It's basically a webinar. It was actually it went exceptionally well. I got a lot of response. It was for directors and being incorporated. I'm going to have several more of these in the next 2 months. And what are some of my topics going to be for the directors? It's going to be about hiring people. But for a lot of you folks, it's about tax changes for 2013 and 14. This is not a political comment, folks, but oh, it's going to be fun in the tax business in the next 2 years. So, I'm going to be discussing some of the things that's going to change in the next couple of years. That'll be, I think I'm going to do that on the 20th this month. And then from now until tax season, I'll have different chats. So just go to our website if you're interested at all. Email us if you're interested. We'll give you, it takes an access code. It works out really well. I'm really happy with the first one. So anything else other than that, I'll be here as long as you folks are. I thank you for allowing me to be here and for coming. Thank you very much.
Well, thank you, and I would have to tell you that I've been using them for, I don't know, ever since I've been in Mary Kate. Well, the first year we didn't use them, we just went and did an accountant. It was like our first year being married and everything. And I think it cost us like over $350 or something, I don't even remember, Rachel, but,
Don't ask me.
I don't remember. But I don't even remember what his rates are, but they're very reasonable. So I went to another accountant and it was $350, but I think they're like $175 or something.
Well, the first year we were married, we paid like $600, and then we went to Tiernan and
Yeah.
paid half.
And they can even go back to previous years. You didn't mention this, but if